What's up guys, it's Jordan here from Coin Bureau. If you're new to the channel, be sure to subscribe and stay tuned until the end of the video to get all of the important information. Please also feel free to subscribe to my personal trading channel for full crypto trading tutorials. That link is in the description. So, what happens when one of the world's most important oil checkpoints gets dragged into a war? That's exactly what we've been watching with the US-Iran conflict. And the ripple effects are now hitting everything. Oil, stocks, interest rates, and yes, crypto. We've just seen a fragile ceasefire. Markets are reacting and investors are trying to figure out one key question. Is this the start of a recovery or just a pause before another shock? Let's break it all down. What's actually happening? The conflict, which escalated in late February, disrupted global trade, especially through the Strait of Hormuz, a route responsible for roughly 20% of global oil flows. That triggered a classic geopolitical shock. Oil spiked, stocks dropped, and safe havens surged. Now we've got a temporary ceasefire, but it's shaky. Even now, oil remains elevated above pre-war levels, shipping disruptions aren't fully resolved, and tensions in the region are still active. So this isn't over, it's just paused. Oil, the core driver. Everything starts with oil. When the Strait of Hormuz was disrupted, oil surged toward the $100 plus expectation, supply chains froze, inflation fears exploded, and even with the ceasefire, oil dropped sharply but is still structurally high, and infrastructure damage could take years to fix. This matters because oil feeds directly into inflation, consumer spending, and central bank policy. And that's where things get interesting. Let's have a look at the macro impact on inflation and interest rates. Before the war, inflation was already sticky. Then the conflict hit and suddenly central banks had a problem. Higher oil equals higher inflation, but also slower growth. That's a stagflation risk. Stagflation is an economic condition defined by the rare, damaging combination of slow economic growth and high unemployment and high inflation. It is considered a worst of both worlds scenario because standard monetary policy, raising rates to fight inflation or lowering them to aid growth, fails to solve both problems simultaneously, often causing severe recessions. Now, with the ceasefire, markets are pricing in higher chances of rate cuts. Expectations jump significantly in just days. But here's the catch. If oil spikes again, those rate cuts disappear. So markets are now completely dependent on geopolitics. The financial markets reaction. Markets have basically followed a textbook geopolitical cycle. Phase 1, shock. The stocks fall, oil spikes, and volatility explodes. Phase 2, relief, which is now. Stocks rally, oil drops, and risk assets bounce. In fact, JP Morgan is even calling for a potential 6% S&P 500 rally on the ceasefire news. But under the surface, there are warning signs. Credit markets are starting to show stress, liquidity is tightening, and risk appetite is fragile. So this rally, it might not be as strong as it looks. Now let's talk about crypto, because this is where things get really interesting. Bitcoin actually rallied on the ceasefire news, hitting a 3-week high. Why? Because crypto is behaving like a risk asset again. When stocks go up, crypto goes up. When fear drops, crypto rallies. But there's a second layer. Crypto is also a geopolitical hedge. In unstable regions, capital controls increase. Currency volatility rises. And people turn to crypto. So crypto is now playing two roles at once, a risk asset like tech stocks and a hedge against instability. And that tension is key. The hidden risks. Even with the ceasefire, the risks haven't gone away. We're seeing supply chain damage, energy infrastructure disruption, rising geopolitical fragmentation, and importantly, emerging markets are vulnerable to capital flight, currency crashes, and debt stress. There's also rising concern about private credit markets, hidden leverage, and systemic fragility. So while markets are celebrating, the foundation is still shaky. So what happens next? From here, there are really 3 scenarios. Number 1, the ceasefire holds. Oil stabilizes, stocks continue to rally, and crypto trends upward. Or 2, the conflict resumes. Oil spikes again, inflation returns, and risk assets dump. Or number 3, prolonged uncertainty, and this is most likely. choppy markets, macro-driven crypto, and high volatility. And really that last one is one of the kinds of markets that crypto does thrive in. So the big takeaway is this: the US-Iran conflict isn't just a geopolitical story, it's a macro story. And right now, macro is driving everything, including crypto. If you want to understand where Bitcoin goes next, you need to watch oil, interest rates, and geopolitics, because that's where the real signal is. Please let me know if you have any interesting insights in the comments, and I hope you've gained something from this information.